Do you ever look at your bank account and think that you're making pretty good money, but you feel like you aren't seeing any of that money because you're paying so much in taxes? Well, you're not alone. That happens to so many business owners, whether they are real estate investors, or they're in the industry, or they are real estate agents. It happens to so many people. Taxes can be the number one expense that you have when it comes to operating your business or your investments. But it doesn't really have to be that way. You just need to figure out changes that need to be made and things that you need to do in order to make sure that you're not paying so much in taxes. So that's what I'm going to talk about in this video here. Things that you can do now at mid-year and incorporate in order to make sure that you're going to pay less in taxes by the end of the year. My name is Keisha Rondino. I am a real estate and business CPA and tax strategist, and I help you pay less in taxes so you can keep more of the money you make and build wealth in your business and your investments. So make sure to like this video and subscribe. One of the first reasons why you are not keeping as much of your money and so much of it is going to taxes is because you're not planning. When you do not plan to pay less in taxes, you are going to plan to overpay in tax. Most people wait until tax season. Once they get their 1099 or they go through their income statement and see what income they have and what expenses they have, they use that time to simply just prepare their tax filing instead of throughout the year taking a look at what they're doing and putting a plan in place in order to pay less than what they end up paying. They just go throughout the whole year operating their business, hoping and praying that they do not owe the IRS a whole lot of money, but they end up owing because they did not plan throughout the year. And that's the key to planning. You have to plan before the year ends and not at the time that you are just simply preparing your tax filing. Because when you're preparing your taxes, that is basically being retroactive. It is reporting to the IRS what took place the previous year. It is more of what I call a report card with how your business and your investments did throughout the year. That is not the time that you can plan for activity that took place in the past. The second reason that you are overpaying is because you may not have an entity strategy in place. The entity that you operate in should be the most beneficial for what your income level is and for what your operations are. So analyzing that does make a difference when it comes to how much you pay in tax. The third reason why you are probably overpaying is because you do not have an expense tracking system. You will be shocked at how many tax deductions will fall through the cracks because you're trying to remember what you did, or you decide that you're just going to tally them up when the year end comes. That is not the best way to do it because 9 times out of 10, you are missing those expenses, and that is causing you to overpay at tax time. The fourth thing is you are not making estimated tax payments. When you skip your quarterly tax payments, that can cause a penalty and it causes stress. So then when April comes, you end up owing a huge amount simply because you didn't pay a portion of what was estimated the previous year. If that sounds familiar, you are not alone. The good news is that it can be fixed, but you have to start now. So this is how you are going to stop overpaying on taxes and keep more of your hard-earned money. 1, you need to do a mid-year forecast. Basically, a tax forecast is considered to be a checkup for your tax. You look at your income year to date, and then you project what you're going to make by the end of the year and figure out what your taxes are going to look like based on what that projection is. That allows you to adjust your estimated tax payments, identify deductions that you may be missing, and make any changes before it's too late. Because nothing can be done after the end of the year. It has to be done during the year so you can implement it and you can operate better in order to get those tax savings. The second thing you're going to do now is evaluate what entity you're operating in and make sure it's the best for you for how you're operating. So you want to look at your income. So for instance, if you're making $50,000 plus in net income, then you want to consider electing to be taxed as a S corporation. That can save you thousands of dollars in self-employment tax, but it also allows you to implement additional strategies that can help you save on taxes. But you don't want to wait until the end of the year, because if you do determine that it's time for you to elect S corporation status, there are administrative tasks that you're going to have to take care of. You're going to have to set up payroll. You're going to have to determine what your reasonable compensation is. You're going to have to adjust all of your bookkeeping. So start early, because waiting to the end of the year is not going to allow you enough time to put this in place in order to reap the benefits from it for this year. In addition to that, you're going to take a look at your expenses and maximize your deductions. That means you're going to track everything with the system. If it's your miles, you're going to use an app that can help you track your miles. An accounting system is going to help you track your transactions from your bank account, or if you have a business bank card, that is going to help you keep everything in place in order to know what came into your business and what you spent money on. Another thing you're going to do is adjust your quarterly tax payment. If you have not been paying your quarterly taxes, or you've just been guessing, it is absolutely time to fix that now. It's going to help you prevent penalties, and it's going to help you avoid that whole tax massive bill that you may get because you did not pay any of the estimated taxes the previous year. Another thing you can do now in order to help you save in taxes before the end of the year is start planning for your retirement. Now, the good thing about planning for your retirement is that it has several benefits that comes with it. Not only are you saving on taxes for this year, it's helping you save for retirement in the future. Of course, we know that you love what you do, but at some point you are going to want to retire. And when you do retire, you want to make sure that you are in a good position in order to retire. So the earlier you start, the easier it's going to be to achieve what that number is when it comes to your retirement. I know it may seem like these mid-year tips that I just gave to you may seem very minor, and it does not seem like it may help you save in taxes, but they absolutely will. Let me tell you about a realtor that came to me back in June to get assistance. She had already made $180,000 in commissions. She had no entity set up. She had no bookkeeping in place, and she had made no estimated tax payments. So after speaking with her and meeting with her, we ran a mid-year forecast for what she is expected of probably going to make by the end of the year, and saw that she would probably owe about $45,000 in taxes. Of course, when I told her that's what she's on track to pay, she was very adamant about not wanting to pay that amount, which of course I don't blame her. So what we did is we switched her to an S corporation. We set her up so she can pay herself a reasonable salary. We also set her up on bookkeeping so we can catch up on all the expenses that she had spent throughout the year because she was not previously keeping up with it. And we also set her up with a solo 401k contribution. So by implementing these strategies here, we were able to reduce her taxable income by about $33,000, which helped cut her tax bill by approximately $14,000. So I thought that was pretty good, and she was extremely grateful. So that is really the power of the mid-year tax planning. You can get a huge benefit from it just by knowing exactly where you are and making some changes within your business operations and using strategies that could benefit you. So if you're looking at this video and you are thinking, I have no idea what my tax situation is right now, it is time for you to make a change, and it's time for you to know exactly where you are. It's time for you to take action, because if not, you're going to just go through the end of the year doing exactly what you've been doing and end up paying a high tax bill, which is probably what you've been doing over the past year. I offer mid-year tax strategy sessions where we review your numbers, we forecast your tax liability, and we create a plan in order to help you save money now before the end of the year. So click the link in the description box, schedule a meeting with my team and we will absolutely be able to help you. You do not want to wait till tax season to see that you have overpaid in taxes. Make sure you like and you subscribe to this video. If there are any topics that you wish for me to discuss, make sure that you leave them below because I would love to hear from you. I look forward to seeing you in the next video. Bye.